Let's touch on that point where we look at the FIFA World Cup having quite a significant impact on the earnings last year and seeing a drop off now. We're also starting to see quite an interesting revenue mix coming through from your divisions with regards to infrastructure making around 52% of the earnings, managed services accounting for 28%, and business solutions where we saw it doubling, now sitting at 16% of the revenue front.
Yes. Well, the first aspect relates to the FIFA World Cup. We did have first quite handsome windfall profits then. Whilst we enjoyed that, what it meant for this year is that it created a significant hole for us to fill. From a revenue perspective, we're glad that we were able to meet that challenge. In terms of the revenue mix, we started off primarily as an infrastructure company. Infrastructure used to be easily 80–90% of the business, but as you can see now, we've said that we wanted to move into up the value chain into different areas of the IT space, and we now 50% of nearly half of our business comes out of the solutions and managed services business.
Let's touch on the business solution side of things, and as I mentioned, we saw it doubling there. It was contributing around 8% to overall revenue. It's now sitting at 16%. Are you planning to ramp that division up further?
Yes, we'd like to ramp up that further. That particular contribution, the growth in contribution, comes out of a particular sector of the solutions business, the ECM, electronic content management space. There are other areas that we really want to grow, mostly in the ERP application space. We've got plans in that area, and we think we should be able to bring those to fruition sometime.
Because we saw a strong impact in terms of the earnings growth within the business solution division, which increased by 54%. Are you able to, do you foresee the sustainable movement of the earnings to the upside, or at least maintaining that kind of 50% growth going forward?
Well, we certainly would like to keep on growing it. Whether it will be at those levels, I think it's another issue. It must be borne in mind also that it's from a comparatively low base vis-a-vis the other divisions of the company.
With regards to what we saw coming through in the margins, we saw that dropping to around 8%. We know that previously it was sitting at 9.5%, then dropping to 9%, now sitting at 8%. How much further is this going to drop, or can we say that you've stabilized at around 8%?
Well, in the first instance, there's been a change in the line on which you report to. I think the figure of 9.5% was we reported on the EBITDA margin. We've decided to report on the operating margin now instead of EBITDA margin. So that in itself will have seen a slight drop off because it's a little bit below. The other aspect to that is, whilst we could have shown a bit of a profit, we have said to the market repeatedly that we're investing in the business and we're using our income statement, so not as much falls through to the bottom line and therefore affects the margin. But we think it's something that we need to do to position the business for further growth.
With regards to cloud services, and we know that you dabble within this space as well, very competitive. How do you plan to differentiate yourselves relative to what we see in the market? Excellent
service. We easily up there in terms of our service level achievements. I mean, up to about 98%, which is significantly higher than industry norms. So that's how we intend to. We just try much better, much harder than others and achieve those service levels, which are very high.
As we mentioned up at the top, obviously slight negative numbers that we've seen coming through in this financial period. Is the worst now over? Can we expect a significant turnaround going forward?
Well, it's a bit hard to predict the market. I mean, we all thought that we're now moving into much more positive territory, but with the impending talk about renewed recession, etc., one doesn't know. What we have been hoping for would still has been a sort of revival in the government business, which still hasn't come through. So all of our growth that we've shown so far has been in the private sector business. And if that trend holds, then we'll continue to show growth because evidently our offerings to the market are finding favor with our client base.
Gary, also quite fascinating that you've withdrawn your cautionary statement relating to the BE shareholding. You seem to still be exploring various ways of dealing with this issue. What kind of scenario are you foreseeing going forward, and have you been speaking to any other interested parties?
Yeah. At the time that we issued the cautionary, the company was in discussions with a specific party, and we had hopes that we would be able to conclude a deal. Sadly, as it turned out, there was really no meeting of minds. Ultimately, we had to abandon those talks. But the effort still continues on a fairly urgent basis. The various options that we could look at, some of them relatively easier for the company to achieve than others. For example, a straightforward vanilla transaction with vendor financing, but that may prove a little bit costly for shareholders, and we're trying to look at other innovative ways of arriving at the acceptable shareholding levels without too much unnecessary cost to shareholders.